Let's start with cash reserve ratio, CRR. Now cash reserve ratio became, it's a statutory provisions, right? It is mentioned in the law. Where? It is mentioned in the law. By the way, the Monetary Policy Committee is also a statutory body. It is created as per the section 45ZB of the RBI Act 1934. In the similar fashion, cash reserve ratio was also created under RBI Act 1934 and Banking Regulation Act 1949. What is cash reserve ratio? Let's break down the term. See, if you break down the term in this examination, in UPSC examination, you will be like a champion of your area, because the word itself explains everything. Cash means liquid. Reserve, the question should come where, right? Ratio is percentage. You have to keep liquid. Cash is the most liquid thing. You have to keep your cash in percentage form somewhere. Okay, you have to keep your cash in percentage form somewhere as a reserve, right? And why we keep reserve? Reserve is something which is kept for emergency. In this case, it is bank run. Bank run is that phenomena where all of a sudden all the people come to the bank to withdraw their money. Let's say there is a specific branch of SBI, any specific branch, let's say Connaught Place branch of SBI, and they have like 5,000 customers who have their saving account, bank deposits, and multiple customer relationships are there. In this case, if all 5,000 people in the next 2-3 days comes to withdraw their money from saving account, from current account, from a fixed deposit, from recurring account, in that case the bank will run out of money, because they have offered that money as a loan. So right now they don't have the entire deposit, because they have given that to a loan to some other customers. Or maybe right now they don't have money, the money is with the other branch of the SBI, let's say Tilak Nagar branch or Rajouri branch or any other branch in India. So in that case, when everyone comes to withdraw money, this is known as bank run. Everyone is running towards the bank to withdraw. Now in this kind of emergency, from where will they get money? So for that kind of emergency, they should keep certain reserves. But how much? Now comes the question, how much? Who will decide this? Of course, the bank of all, RBI. So RBI will decide this percentage. Presently it is 4.5%. Now how this 4.5% is determined? This 4.5% is of NDTL. So in the previous example, what was the NDTL? 100. So 4.5 rupees, right, out of total 100 NDTL should be kept as CRR by a bank, right? Now the question is, sir, where will the bank keep this cash? In their own branch? No. They will keep this cash with the most trusted partner, the banker of banks, RBI. And it changes regularly. Every day it changes. Every day hundreds and thousands of crores are being deposited, hundreds and thousands of crores are being withdrawn, and every day this 4.5% should be maintained. And that's the duty of the bank managers and all. So repeating it again, it is the amount of cash that every bank must keep, right, to the RBI as a percentage of their NDTL for the emergency purpose. That is cash reserve ratio. Presently it is 4.5, right? Now who can keep it? Question is, right, who? Very simple, all banks. That's it. If it is not a bank, it is not under CRR. Now you'll say, sir, all bank means scheduled banks, scheduled commercial banks. non-schedule, regional rural banks, cooperative banks, right? Small finance bank. See, I'm going to discuss all these in the coming classes, that what these all are. Small finance banks, payment bank, right? So all these kind of banks. Now, who will not keep CRR? That is non-banking finance companies. They are not allowed to keep, or they are not required to keep CRR. Otherwise, they have to maintain CRR with RBI. All right. Now the question comes, sir, what if they cannot maintain this 4.5 as a ratio? What if they fail to do that? In that case, there's a provision of penalty as well, which RBI charges to these banks, and the penalty is 3% above bank rate. 3% above bank rate. Let's say if bank rate is 10%, so the penalty will be 13%. That's it. Do we have an upper limit of CRR? No, there is no upper limit. Presently it is 4.5. Who knows? In future it can be 14.5. It can be 50.5. It can be 60. It can be any percent. There is no upper limit to that. Now, whenever RBI wants that there should be less money with the people, that is, they want restrictive monetary policy, strict monetary policy, tight monetary policy, they will increase CRR. When the CRRs are increased, all the banks have to keep a certain amount of their cash with RBI. Now, when RBI, let's say 4.5 rupee out of 100 is being capped at RBI, right? This is the case. This is CRR. So, do RBI pay something? I mean, if you keep money in your bank account, whether it's a saving account, RBI, that specific bank pays you interest rate, right? Until unless it's a current account. So, the money which is kept with RBI, it's a cash money. Do RBI pay interest? No, there is no interest. So a bank does not earn any interest on this money. So guys, this is idle money. It is of no use. It is like the cash amount, the cash that our mothers and family members, they hide somewhere in the house. Inside the boxes, the rice box or anything else, right? Usme rakhte hain wo. So they try to keep that. A contingency fund. When demonetization took place, many of those people were badly hurt actually. So there is no interest earned by banks, even if they keep the money. Now I'm giving you an example of 100 rupee. Guys, this is 1 lakh crore. Now you keep on adding zeros into that. Now 1 lakh crore means 4,500 crores are being capped with RBI in terms of cash, with no interest being earned on that, right? So things are like this. Coming to the second tool,